Good evening, viewers.
Good evening, viewers.
Join fast. Today, I will discuss about the journal entries. How is my audio, video? Is it audible? My video audio, please check. Well, well. So join fast. So I am going to start the class now. Today's class, especially for the journal entries and guiding principles, rules for recording journal entry in the books of journal, business transaction that take place. So my preceding class, I uploaded one video about journal source of documents. Various source of documents are there. Based on that source of documents, journal entries are recorded in the books. From the source of documents, vouchers are prepared, and on the basis of vouchers, journal entries recorded in the journal. So business transaction. Okay. Well, so journal entries, the books, the books in which the transaction is recorded for the first time is called journal or book of original entry. So it is I already shared in my channel making a short video. Hopefully all of you have watched. So this is the classes which I maintain basis on sequence. Okay. First one by one you have all of you follow the class, all classes you all of you attend it. If you missed any reason, then you go you see it, recorded classes you will get in my channel. So for especially for preparing to you all for accounting classes, so far I have uh, conducted one live class and one recorded classes. Live class in which accounting equation, double effect of every transaction, assets equal capital plus liabilities equations, and by taking some transaction accounting equations were prepared. Dual aspect concept based accounting equation, assets equal capital plus liabilities. And today's we are going to learn recording of journal entry in the books of account. What are the principles? What are the different types of accounts? Classification of accounts, broadly personal accounts, impersonal accounts. So I am sharing my screen. So very less number of students have joined. So join fast. Oh well, okay. So sharing screen. So in my preceding class, which I uploaded, and this is a journal And what is the meaning? The book in which the transaction is recorded for the first time is called journal. So now what is journal? So if you can zoom your mobile screen and you see the writing, you can see the writing in a proper way if you zoom your mobile screen. Okay, journal. So question. So in the preceding class, so I uploaded these definitions, meaning of a journal and subsidiary books. Yeah, and now I am sharing with you about the expected question from this topic. That what type of question that you need to learn. So first question is that what is journal? Then you can write at least one sentence. The book in which transaction is recorded for the first time is called journal or book of original entry. What is journal? Okay. Then what is a journalizing? Then the question answer is the process of recording transaction in journal is called journalizing. All right. So this is the questions frame. And similarly, what are the subdivision of journal or journals are divided into how many types? This one. So then these are the journal proper. Number one, cash book. Number two, purchase book. Number three, sales book. Four, purchase return books or return outwards book. Five, then sales return or return inward books, then bills payable, then bills receivable. So you may get one questions like 1 marks or 2 marks that give any four example or two example of subsidiary books. Okay, subsidiary book give two example of subsidiary books. Then you can write from here out of eight, 1, 2, 3, 4, 5, 6, 7, 8. So eight subsidiary books are there. So out of eight subsidiary books, you can write any two. If it is two, then you write journal proper, cash book, purchase book, sales book. So then, what is the importance of each type of this journal proper? Cash book importance or features of purchase book, what type of transactions in a big business, the transactions are numerous. Okay, so then for the convenient, for easier purpose, the company or business house maintains different type of journals, and that each type of journal contains a particular type of transactions only to be recorded. Okay, so like features, I'm showing you that the features. So journal for journal proper and cash book. Then there is a purchase book. Then there is your sales book, purchase return book. Now listen very carefully. There is that cash book. All cash transaction, goods purchased for cash, and then it will be recorded in cash book. If goods purchased on credit, then it will be recorded in purchase book. So that means the cash book is used for recording cash transaction. That is cash coming into business and cash going from business. Then purchase book, so goods purchased on credit, which is for resale. Goods purchased on credit and which is for resale, mean for resale. So then if goods purchased on credit, then it will be recorded in purchase book. If goods purchased for cash, then it will be recorded in cash book. Okay, very simple. Now again you see sales book. Now all goods sold on credit will be recorded in sales book. If goods sold for cash, then it will be recorded in cash book. So that means the sales book is for recording credit sales. Similarly, purchase book is used for recording only credit purchase. Now, sometimes purchase return. Sometimes you had purchased goods from the supplier, and because of some defective quality, you have to return the goods. Then that the goods return to supplier. That is a purchase return. And then all goods returned to suppliers shall be recorded in purchase return book, or that book is also called return outward book. Similarly, you sold some goods to your customer, and later on the customer return goods to you, then all goods returned from customers shall be recorded in sales return book or return inward book. Okay. And be all bills payable by business negotiable instrument, and all bill receivable by business from the parties, this will be recorded in bills receivable book and bills payable book. Okay, so bills receivable is the current assets, bills payable is current liability. These are we will record in. So each book has special features. Okay, I hope you have understood. This is the what is, and now for first one is the journal proper. Okay, journal proper is that book, the transaction which are not covered by the following these books, seven books, that will be recorded in journal proper. Okay, now say for example, so here you see, if goods purchased on credit for resale, then it will be recorded in purchase book. If goods purchased for resale or for cash, then it will be recorded in cash book. Now, similarly, if the furniture purchase, which is not for sale, which is used in business, then it will be recorded in journal proper. All right. So this is a transaction which are not covered by these seven books will be recorded in journal proper. So each book having particular features. So separate book is maintained for separate type of transaction. So this is the journal. And now journal entries. I will show you the journal entries, how it is to be recorded. Okay, this one. So before recording journal entries, you have to understand these rules of debit and credit, which is given here. Rules of debit and credit. This rules of debit and credit. This one. All right. This. So this is a dual aspect concept in accounting. It implies that every accounting transaction should be expressed by a debit amount and an equal and opposite credit amount. Equal and opposite credit amount. So that is every transaction must be recorded in two four aspect. That is debit and credit. Okay, so now for recording of transaction, to understand the rules of debit and credit, you have to understand the accounts. Here the rules of debit and credit in respect of different classes of accounts are different. So classes of account, broadly we can say personal account and real account. You see that number two, real account, and third one is the nominal account. So what is the rules of debit and credit in case of personal account? So here it is given, debit the receiver and credit the giver. So you all of you have to remember this rule. This is the traditional rule. Modern rule, or it is a traditional approach. Traditional approach has given the rules of debit and credit in this format, and modern approach I will discuss later on. Okay. Now you see the rules of debit and credit. Debit the receiver and credit the giver. This rule is applicable in case of personal account. Okay. Now personal account is subdivided into three categories. They are this one. Natural person personal account. artificial person personal account, and a representative person's personal account. Sometimes you get one question, one mark question, that what is the rule of debit and credit in case of personal account? So then what will be your answer? This rule of debit and credit in case of personal account is debit the receiver, credit the giver. Okay, this is also one mark questions. You have to write rule of debit. Similarly, rule of debit and credit in case of real account. Then you have to write this: debit what comes in, credit what goes out. Then what is the rule of debit and credit in case of nominal account? So then rules of debit and credit: uh, debit expenses and losses, credit incomes and gains. Wait, credit dishes, credit incomes and gains. Okay, now how to understand that these rules of debit credit in recording of journal entries? So I shall take few transaction and we will understand these rules of debit and credit using while recording business transactions. Okay, all right. So you see, this is the rules of debit and credit. Now here few business transactions I have taken. From the following business transaction, pass a journal entry in the books of Mahesh. Mahesh is the name of person, proprietor of the business. So now all of you assume that you are Mahesh, involving yourself while recording business transaction. So if you assume yourself a Mahesh, then it means that you have started business with cash rupees 20,000. You have purchased goods for cash 5,000, and you have sold goods for cash 7,000, and you have paid salary rupees 1,000. So involve yourself, and the then only you will understand this recording of transaction journal entries. Okay, so you see here how it is to be recorded. All right, so this now one by one using Mahesh started business with cash 20,000. Okay, so then in this way we write down the journal entries. So cash account debit to capital account. So cash coming into business, and who has given proprietor. So Mahesh has given the capital. So this is capital account. So you can write Mahesh capital account, and with equal amount of debit and credit 20,000, 20,000. So this is the debit credit column, this is the debit column. Okay, see, and now how this is recorded, that the rules for of debit and credit, how it is used. They could also say the rules of debit and credit. Okay, now see here, rule of debit and credit. Now first you have to identify what are the accounts. So this is, here I have not explained you the accounts recording transaction relating to asset. This is the real account. So cash is the asset. So now in a business, you see here what is given: debit what comes in. So you have to identify what type of assets accounts are involving in the transaction. So one is the cash account, is cash coming into business. So this is the cash. And what is a debit what comes in? So cash is a real account, and a debit what comes in, and credit the giver. So then you use that to credit the giver who has given the amount to the business. So business is separate from the owner. That is why the equation is assets equal capital plus liability. So business. So Mahesh has given the amount of capital to the business. So credit the giver. So Mahesh is the personal account, name of the person. So all natural persons comes under natural personal account. Okay, all natural persons. So you see here. Now you can analyze it. It is given here natural persons personal account and artificial persons personal account, representative persons personal account. These are the subdivision classification of personal account. Natural person. Now if the amount is received from Mr. Ram, Mr. Sham, Mr. A, Mr. B, Mr. C, they comes under natural person. Okay, so here the Mahesh, the business has received money from Mahesh. Slightly tricky here, that is the business is separate from the owner, so business itself a person and it comes under artificial. So business is created by men and then it come under artificial person, that is here artificial persons personal account. Okay, and now my question is that natural person Mahesh, and it comes the rule of debit and credit. Obviously, he is not the receiver; he is the giver. So this one, okay, this is the credit the giver. So and you just I told you that you can write here Mahesh capital account here, Mahesh capital account or simply capital account. So then cash account is real account, right? Cash account is real account. So real account rule is debit what comes in, then it is to be debited. Here, this is how we write the journal entry in the journal. So you cash account dot 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 debit to capital account. You see the format, how it is written, the format. This is the style. This is the custom of accounting. In these styles, and every journal entry followed by narration. If you have seen my preceding video, class, so there I have mentioned the narration. So every journal entry followed by narration. So being business started. So then it implies that this brief information, short information about the journal entry. This is the journal entry, cash account debit to capital account. So being business started. It it indicates, it implies that when business started, we pass this journal entry. Okay, only when cash brought into business or business started with cash, then this journal entry is recorded. Cash account debit to capital account. Debit amount, this is the debit column and this is the credit column. Okay, well, where it is. Now, next transaction. So date, you put the date. Year is, this is the year 2025. So in 2025, the business started, say June 1. This is the June 1. And here, next transaction we will take June 3. So date. This is purchase goods for cash. So now you have to identify what are the accounts involving in this transaction. Purchase goods for cash. So when you purchase goods coming, cash going. So both are real account stock. Okay, so this is the transaction. Then what is the rule of real account? This is the rule of real account. Debit what comes in, credit what goes out. So goods coming and purchase. Sometimes we take it in nominal account also, purchase account. Okay, so goods coming, cash going. So now in this transaction, both accounts are involving real account assets. Debit, this is debit what comes in. When you purchase goods, goods coming and cash going, what goes out. So this is your entry based on this real account rule of debit and credit. Debit what comes in, credit what goes out. So here when goods purchase, so debit what comes in, goods coming. This is purchase account debit. So when goods coming, we in a practice we do not write goods, we write purchase account. This, and where cash is going, so here. And what is the value of goods purchase? 5,000 goods coming, 5,000 cash going. So this transaction involving both the accounts, real account, goods coming, cash going. Okay, it is not necessary that all the transaction having the same type account. That is the real. In sometimes we get the real account, real account. Sometimes one account is a real account, another account is personal account. Sometimes one account is nominal account, another account is real account. So then nominal account rule we have to apply, then a real account rule apply. So based on that is we have to identify it's coming or going, real account. Okay, and in nominal account all expenses. So salary paid. So next, okay, here goods sold for cash. So when business makes goods sell, then cash coming. So here cash coming, cash sales, goods going, this one. Cash account debit to sales account. When goods purchase, purchase account debit to cash account. When goods sold, cash account debit to sales account. On selling of goods, cash is coming. So cash is the real account, debit what comes in. So if so, one thing you can draw the conclusion from the transaction that if cash is coming, it will be always debited. Cash account debit. If cash is going, it will be always credited. Cash account. This is the credit. So writing in this style, this to cash account to sales account means this account is credited, and its amount you have to write in credit column, this credit column, this amount here is straight. Okay, and here debit columns, this is the 7,000 goods sold for cash, cash coming and cash going in this way. And salary, it's a expense of the business, nominal account. So debit or loss and expense. Salary paid by business, it is a expense. Now I will show you this one, this here, this nominal account. So what type of accounts comes under nominal account? What type of accounts come under real account? That you have to understand this. Asset, cash coming asset. Okay, and now cash is the assets. No, okay, now and then if cash coming debit, if cash going credit, because this is the rule of debit and credit. And similar some example here. Cash comes, what comes in, what goes out. If it is coming, you debit. That is here. Debit what comes in. And credit what goes out. Okay. Next thing. Then nominal account, that is all expenses, salary paid, wages paid, electricity bill paid, telephone expenses paid, carriage expenses paid, while purchasing goods, the carriage on purchase. So these all are expenses which incur to earn income. Okay, expenses, and they come under nominal account. And it is here given that the meaning also here given here. The accounts recording transaction. This the accounts recording transaction relating to losses, gains, expenses, and incomes are classified nominal accounts. So examples, so income, okay, expenses, say expenses, commission paid, expense, discount allowed, expense, then salary paid, expense, wages paid, expense, telephone bill paid, expense. So these expenses come under nominal account. Then if it is a income, so suppose that commission received income, then this will be where it is a income. Okay, commission received, interest received, income. If interest paid, expense. If interest received, income. Rent paid, expense. Rent received, income. So this is so, and then if it is paid, debit. If it is received, credit. That is why it is given here. If it is received here, similar here. This one you see, debit. What is the rule given? Here, debit expenses and losses, credit incomes and gains. Incomes and gains. So what I explain, what example I have taken. So suppose that interest on loan given by the business, then interest on loan account debit. Suppose interest on loan received, then it will be income, so it will be credited. Now I will show you here. This is suppose, and similarly salary paid here. This he paid salary 1,000, so it comes under nominal account. This using this expense losses debit here salary paid. So when you paid the salary, what is going? Cash going. So here cash to cash account. So nominal account debit, real account credit. You have to see that it is coming or going. That is expense and losses. Losses incurred or expenses incurred. Okay. And if it is the income, then income and gains credit. Subsequent classes, again, I will discuss some terms here. You just see this is the informative class. Informative class, this one on this is how we record the journal entries. This is the using the format. This this is the format we use for recording journal entries. Okay, salary account. Now we suppose that one question more. Just suppose the salary received. If this could have been given in the question salary received, then your entry will be reversed. So when salary received, cash is coming. Cash account debit to salary account. Cash account debits to salary account. But here salary paid, expense incurred. So expense incurred debit, income credit. And now next one here, next transaction I am taking here, this one, final transaction. This is the he deposited money into bank. So bank, what is the name of the bank? SBI, State Bank of India, rupees 4,000. Okay, so bank is a artificial person here. This is artificial bank, State Bank of India, Canara Bank, this comes under artificial person's personal account. So artificial person. So but the rules of debit and credit will be same here. The debit the receiver, credit the giver. Now when you deposit money into bank, so artificial person receiving your money, that is the debit the receiver. What he has received and what is gone from your hand, cash gone. So you deposited money into bank, this is credit what goes out. Slightly tricky here. So both the debit and credit rules using here. So if you practice in this way, then you will understand that SBI account, it is the name of bank. Debit the receiver 4,000. What is gone? Cash. Money is gone into bank. So this is credit what goes out and debit the receiver. Credit the giver, obviously credit the giver. Who is the giver? Giver is the you are the giver, so your name will not be recorded. Only the persons with whom you are dealing. You are dealing with the bank, so you record the name of the bank. You are dealing with the person. Suppose that amount paid to Mohan, if I take one example, another example, amount paid to Mohan, what will be the journal entry? Ah, can you say this? Suppose that what you see on the screen, is it visible or not? You just check it. Suppose one more transactions I am taking here. One more transactions I am taking here. Suppose amount paid, visibility is having problem. Amount paid to Ram, rupees 1000. So Ram is the natural person. Debit the receiver. Then we will write in the shortcut way I am writing Ram's account. So this debit to what is given, what cash. So cash is gone. Debit what comes in. Obviously it is not comes. It is gone. Okay. Credit what goes out. Cash account. What is the amount? So suppose that this is the debit and credit. This is the debit column, this is the credit column, and narration being amount paid. Now, Ram is the natural person. Whether the natural person, artificial person, the rule of debit and credit. So now, when you paid money to Ram, debit the receiver. So that is here Ram's account debited. And credit the giver. So credit the giver means you are the giver, you know that the amount you have paid, no need to record your name, what you have given, cash. So money you have given. So what you have given, or you can say why Ram's account debited, because money is given. Money is given, so cash is the example of real account. Okay, cash is real account. So then real account, so obviously when you pay money to Ram, cash is not coming, it is to going. So credit what goes out, the rule of debit and credit. Ram, okay, Ram's account to cash account being amount paid. Now if you receive the money, now I am taking the second transaction. You see here. Suppose that amount received from Ram, rupees 2000. Then what will be your entry? So when you receive money, so money is coming. That is the cash. Debit what comes in? Credit. Debit what comes in? Cash account debit. So from whom you have received? From amount received from Ram. Ram. So to Ram's account. What is the amount received? 2000. So in shortcut way, without making the format, so you have to draw the format. Format is you have seen na? Date, from particulars, ledger folio, amount, debit column, amount, credit column. Okay, this is the format. Ledger folio. So in the ledger, page number, the in which page number of this cash account is recorded in the ledger. So there are two principal books. There are two main books in accounting. That is, one is the journal, another is ledger. From the journal, ledger account is prepared. Okay, so then for the journal entries, here we record the journal entry. These journal entries recorded, and this cash account again subsequently it will be cash account will be prepared in ledger. LED ledger. So from the journal, ledger is prepared. So in the ledger, in which page this cash account is prepared, that is the ledger folio. Suppose in the page number 2 of ledger, if the cash account is prepared, then you have to write to page. So it is normally in the question, folio column information we do not get in the question. So only it is the part of format. Okay. So you draw this one. This one I have drawn a format. This is this. We do not write anything in this particular column. This, sorry, it is your folio column. Okay, in this folio column, because folio column information not given in the question, and generally we do not get in the questions folio column information. You just draw the format and you write down with nothing to write in this column. It is a part of format only. So LF, this is the ledger folio column. So these are the information that you have to understand. Okay, now I am showing you that is the these examples here. This is, you see, this is ledger folio. Okay, this format. Now what I am trying to say, that if amount paid, this is the amount received. What is the entry? If amount paid, debit the receiver. If amount received, credit the giver. Ram is, this time the money is given by Ram. So credit the giver. So okay, credit the giver. What he has given? He has given cash. So cash is the real account again. So debit what comes in. What is the rule of real account? Debit what comes in. It is, you see here, this one, rules of debit and credit application. This one, how we apply: debit the receiver, credit the giver. This, debit the receiver, credit the giver. Now amount paid to Ram, rupees 1000. Amount paid to Ram. So your money receiver is Ram. So Ram account debit. Credit the giver, you are the giver. No need to write your name. And here, okay, but in the second transaction, amount received from Ram. Amount received from Ram. So then who credit the giver? Debit the receiver. This time you are the receiver. No need to write your name. Only the person who has given money to you, and only the person to whom you have given money. So his name should be written. Okay, debited or credited. This is way of understanding our rules of debit and credit. This amount paid to Ram, debit the receiver, rupees 1000. Here Ram account debit to cash account. Well, so here how we record the transaction using this uh, journal entry format. Is gone this one again. Wait, wait, by mistakenly I had to. This. So in this way, you apply the rules of debit and credit, and a recording of transaction is to be done. Well, so here I am ending the today's session, and to be continued in the next class again. Okay.